Welcome. It's gone 10 o'clock, and this is our second webinar of 5 this August, where we are looking at some of the new features introduced in version 3 of the emoji trading order flow suite. This webinar is going to be recorded. It's going to be posted by close of play Monday on our website and also on our Vimeo and YouTube channels. So if you want to review it, share it with your friends, that's just fine. It will be posted up there on the internet, as I say, come close of play on Monday. In terms of our agenda today, last week we kicked off our walkthrough of version 3 of the audio suite by looking at Price Rejector Pro, one of our most powerful and most comprehensive indicators that considers all 3 elements of order flow analysis, namely aggression, exhaustion, and absorption. And we also use that indicator to have a walkthrough of advanced look-back analysis, how we can filter events based upon time independently of your chart period, also with a bit of a forgiveness factor relating to price. What we're going to do this week is only concentrate on one indicator, which is Absorption Pro. We'll be using a mix of slides and the live market. I've got ES up today. Crude and ES have been quite live, which has been fun. So we will kind of deep dive into Absorption Pro, and then once we've embedded the concepts of absorption, together with how the indicator can help us visualize it in various places, we'll use that to start our exploration of a brand new feature in version 3 of the order flow suite, which is advanced pullback analysis. But we'll come to that in about 20-30 minutes time. The whole point of absorption and using indicators to help identify it is helping us to see the unseen. Many traders who I talk to and I help with coaching on our training classes lose sight of the fact that when they are in the market, there's somebody else on the other side of the trade. And it's my belief that the big forces that can move the markets, the other time frame traders, if we use market profile Jim Dalton kind of terminology, if they are trading gazillions of contracts for whatever reasons, most likely real trading in a commercial usage, you can't really execute a lot of size using market orders. You're going to show your hands and you're going to strip all the liquidity out of the market. And this is where the concept of working orders into the market comes from. If I've got to buy 20,000 contracts of ES in the next 7 minutes, because that's the brief I've been given by my client, I can't go long at market 20,000 contracts. I suddenly kill the market. So orders get worked in using limit orders. And many traders lose sight of the fact that if they lift the offer or hit the bid, there's actually someone on the other side that they're trading with. And these limit orders providing liquidity into the market, and the market orders consume that liquidity. When all the liquidity gets consumed, price moves. We also hear traders, retail traders talk a lot about, oh, there's an iceberg order. I got trapped by an iceberg order. Someone was spoofing with the iceberg order. Well, if you show your hand, if you're wanting to go long 20,000 contracts, you put a limit buy in the book, 20,000 contracts, why would you show your hand? You're going to use an iceberg to drip feed your desire to buy. You're also going to put some sell limit orders above the market to try to suppress the market, or worst case, each time the market goes up, you're happy to sell at that higher price and hopefully force the market back down. So there are real reasons behind iceberg orders and behind large limit orders. And I think it's wrong to consider that people are out there trying to spoof the poor little retail trader. Fine, retail trader misreads what's going on. There's your lesson. Trading isn't a charity game. But the limit orders are there as tools which enable the objectives of traders that are trading some serious size to fulfill those objectives. So what we can do using Absorption Pro is visualize the presence of these strong passive traders and their activity. And we can do this in a way that allows us to kind of filter out the noise that we would otherwise look at if we look at every piece of data necessary in order to see this. So what we'll cover today is Absorption Pro, the indicator, and then we will use the advanced pullback analysis that is present in Absorption Pro, as well as several other emoji indicators, to bring the concept of absorption and also our advanced pullback analysis tool to life. So how do we identify absorption? The key is understanding the delta at every price level. Now, when we look at the footprint, typically we are looking at aggression. So if you look at the candlestick on the right-hand side, it's a down candlestick. We can see various imbalances in it. We've got two buy imbalances at the top in green. We've got a collection of selling imbalances on the way down, including 3 that are stacked on top of each other. This is what most people get drawn into when they're reading order flow in the footprint to begin with. They see all this activity of market orders. The footprint is showing us what was traded using market orders. It's not taking into account who matched those market orders, the limit orders. But they see the aggression and they'll see all these sells and go, oh, well, look at all this selling, I'd better sell. You know what? By the time you see that, you're a bit late. You can maybe consider the retracement and seeing what happens when we revisit that area of aggressive selling. But many people get hooked on all the red imbalances, all the green imbalances, and try and chase them. At the point you're trying to chase them, you're too late. Now, on our updated website, in our knowledge base, we have put a selection of articles together which we call Order Flow Basics. And we introduce the concepts of aggression, exhaustion, absorption, and you'll see the page here where we go in quite some depth on how to understand absorption and delta at price. So I'd encourage you to visit the website, have a good read of that, and it really starts to introduce the concept. But as a high-level explanation of how we can equip ourselves to identify absorption, the tool that we use is considering the delta horizontally. So we're not looking at diagonal bid-ask imbalances. What we are doing is looking at every price level, subtracting the bid volume from the ask volume. So in this illustration here, at the top of this candle, 2 contracts lifted the offer, no volume, hit the bid. So 2 minus 0 is +2, positive delta. 1 price level down, 113 contracts lifted the offer when this particular price was the offer price. When this price was the bid price, 53 hit the bid. We still had positive delta. So you can see we are calculating delta horizontally. What we can read from this is at the top of this candle, which was a down candle, net, there was buying at every price level. And we would expect that in an orderly market. But we have closed below the area of that buying. So we can interpret that the aggressive buying activity at the top of this candle was absorbed by stronger passive sellers. If it hadn't been absorbed, price would keep moving up. As market orders consume the liquidity of the limit orders, if all of the limit orders at a given price level are consumed, we move up to the next level. We move up again, we move up again. But if aggressive orders cannot consume all of that liquidity, then by extension, the passive traders are absorbing the activity of the aggressive traders. And that's why it's called absorption. So as a very simple measure, what we are looking for is, are we below areas of positive delta? Are we above areas of negative delta? If we are below positive delta, passive sellers have absorbed aggressive buying. If we are above levels of negative delta, passive buyers have absorbed aggressive selling. So I'm going to switch over to my Sierra chart, and we can start to see how, with no indicators, we can start to visualize this. So here I've got the chart book which I put together last week and showed you. We include this in our Quick Start Study collection. We call it basic footprint, emoji order flow guru, one column style. So what we have got here is a regular bid-ask footprint. We're showing 400% imbalances. We're coloring the background based upon the delta. So we can see at the top of this candle, 82 minus 0, positive delta. 311 minus 293, positive delta. So we're displaying it as a profile. Personally, I always have the delta profile aligned going from right to left. I use volume from left to right, delta from right to left. It's just my shortcut. And I'm purely coloring this based upon the delta. So now I can immediately start to get a sense based on, as we've traded at different price levels, has activity been absorbed? So if we look in the 10.05 candle that's just closed, we can see at the top 4 price levels, we had positive delta. We've closed below it. So it's reasonable to assume that the aggressive buying at the top of this candle was absorbed by stronger sellers. And as we start to look at contextual points in the market, and we look here, so okay, ES has fallen down today, we would hope to see absorption at lows. And if we look on this 934 candle, so this was what? This was the initial balance broke here, we went down a bit further. We can see that this negative delta was actually the largest negative delta within this candle. So there was passive buying that was more powerful than the aggressive market sell orders that sold into it and hit the bid. So these are our clues. We're looking at the polarity, the positive or negative of delta, and we're looking for really standout levels, whether it is consistency at the top, and we saw last week how price rejector can consider absorption as well as exhaustion for price extremes. So we're looking for both consistency, or we're also looking for what is large relative to everything else. So that's great. We can read all of this information in the footprint using standard Sierra chart numbers bars. We can easily configure the chart to do that. The challenge is we've got a lot of information. I coach people how to read this stuff from the raw data. I think it's very important to understand this from first principles. But as you start trading the more and more markets, or you have multiple charts up, you can get into a bit of information overload. It can start to get quite overwhelming when we're looking at aggression, we're looking for exhaustion patterns, we're analyzing the delta, we might have some other indicators up, we might have a market profile or a volume profile. And to my mind, the reason we use indicators on our charts isn't for magic buy or sell signals, but it's to filter out the noise. We should have the computer doing what it's good at, which is analyzing this raw data and then filtering out what we want to know within that raw data. So that really is the rationale behind why we build indicators. They are there to make things easier. So what we're going to do is have a walk through Order Flow Suite version 3 Absorption Pro. It's a single indicator that we can use to identify absorption, but we can use it to identify absorption in several different scenarios. We can identify absorption at price extremes. We can identify it across bars. We can identify it when aggressive traders get trapped, the people who bought high or sold below, which we've all done in our trading careers. A new concept in version 3 is contested levels. I'll have a walkthrough of that. And then we'll move into the pullback analysis, and I'll show you how we can use Absorption Pro as part of pullback analysis to find really good entry triggers and improve our trade timing and minimize our MAE, maximum adverse exertion, how far offside, how much heat we take during a trade. So let's dive into the indicator. We'll go back to the charts. Here we go. So what we'll do, we'll use this 8-tick reversal chart. I go to my studies. I've already added Absorption Pro on here, isn't doing anything yet. If I bring up the settings, we can see we can configure the indicator for various modes that we're wanting to do. Do we want to see absorption at extreme, absorption across bars, trapped aggressors at extreme, or identify the outcomes of contested levels. So I'll walk through all of these individually. Let's start with something simple, absorption at extreme. So I tell the indicator, identify absorption at extreme. I can determine what my extreme position is. Do I want the very highest or lowest price in the candle? Do I want that +1 tick, or do I want it anywhere within the wick, anywhere it's been rejected? I use extreme +1. And we'll set the visualization to fixed projection just for now, and we will go 1 bar. So if I put this on the chart, we start to get too many signals actually. But you can see here where we had this big absorption at the low today, we've identified this. But this is, a relatively fast chart, 8-tick reversal. We've got too many signals on here. So what I can start to do is filter this down. Let's go into the studies window. Let's amend the settings. I'm going to use the advanced look back filter that we introduced last week. What I'm really interested in is I want to see if we've got strong absorption at the high or low of the session. So I'm interested in fading the edges and taking a reversion trade on the way back in. So I change my look back filter, session high, session low. We get rid of a lot of the noise. And now I'm only starting to get signals of the day's high or low. What I can now do to really clean up my chart is let's take this profile off the numbers bars. So I'm going to change the background type within Sierra chart to full background, which is transparent. So I've cleared a lot of color off the chart now, and we're starting to get some clear messages as to when we're getting absorption at the extremes of the day. We can go a bit further as well. I can go into the study, and maybe I want to keep track of these levels using emoji zone dynamic mode. So if I change the visualization into dynamic, and we'll track the order flow, now we can see how do these levels hold or not when they retrade. So, okay, no surprise, 2 minutes after the open, someone held the market 2 minutes after the open with only 48 contracts. When it broke in a way that told us they weren't defending it. So we go from the solid green new demand into a dotted orange outline, giving us the sense that this level is unlikely to hold. Okay, we nudged against it a couple of times. That's just random. It's an 8-tick reversal chart. The market doesn't care what period I'm looking at. We broke it though. When we broke it with the emoji zone dynamic mode, this new demand turned into supply on the basis that somebody's got it wrong. If they haven't exited their position, they're likely to defend that on the way out. Now also look at the aggression as we went through that level. Look at this 0, which shows us a stop was most likely triggered. Now, I don't believe this is coincidental. Somebody held it here at the low. We nudged lower by 3 ticks. We bounced around a little bit. As we went down, we went through this with some aggression. Yeah, because people that understand volume are looking at these levels. That's why we see events around these levels. Let's continue. The absorption of extreme that was at the session high broke in a way that implied it was going to provide demand. Okay, we know today has gone down a long way. We had it absorption again, 1 tick off the session high. Look at this candle. Look how we held within 1 tick. And again, okay, I can see we went higher. We have unfinished business at the high. But here's how you can start to tell the story of what's going on. Now here, this has just popped into view. This is going to be absorption of the stream, possibly from overnight or from previous session. We traded, but the emoji zone has told us that the way we traded here has implied it's going to hold. And you can run very simple trading strategies on, if I see new supply or new demand, not on every bar, but do it somewhere contextual, high or low, session high or low, daily high or low, excuse me. Then it's really unlikely that a level like this at the extreme is something we're going to plow through, especially if it's been there for a long time. So you could have a really simple strategy, which is whenever I'm approaching this and it's beyond the extreme of the day, I'm going to fade it. Okay, we did break that. It's been very volatile this morning. But I think you get a sense. We are looking for the extreme absorption at the extreme of the day, and the emoji zone dynamic mode tells us how the level is tracked, how the supply demand is holding as we trade through it. Now, yeah, I hope I've pronounced your name correctly. He's asked if you get a signal at the end of the candle. No, we will highlight the conditions in real time. We don't update these zones until the close of the candle, because anything can happen as we're trading through it. But if we get a new condition through the candle, so let me turn off the filtering, and we might find that we get absorption extreme in this candle. If I turn off the look back filtering, so a bar quantity of 1, we'll turn that off. We may see, of course, I've put too many emoji zones on here, so I've now probably killed the recalculation period. Bear with me, I should have turned that into fixed projection for the best example. But any new events will appear, here we go, any new events will appear within the candle as the candle develops. You can see the existing emoji zones, and we've got far too many, so I'm not filtering anything. They stop before this candle. They'll project on after the close of this candle. But new events, new supply and demand events, are displayed and will disappear if the event disappears in real time on the current candle. So we would have a, let's see if I can just annotate this. Here we go. So if we had new supply at the top of this candle, we would actually paint a zone here. If that condition disappeared, it was clear during the lifetime of the candle. So that's what's John asking? Do time-based bars give stronger signals than non-time-based bars, i.e. reversal or Renko bars? I think I mentioned this last week. Lots of traders think I must have a faster and faster chart to get closer to the action. I am not an advocate of faster bars. I think bars have got to contain enough volume in order for us to be able to read the volume. Peter Davis, Jigsaw, has said, and this is a great quote, price moves vertically. So we actually want to capture volume vertically. Whatever arbitrary horizontal delineation we put on our chart is wrong. The market does not care if I'm using 8-tick reversal or 10 range or 5-minute. The fact is, lots of people are looking at 5-minute and 15-minute and 30-minute and 4 hours. So there's a degree of self-fulfilling prophecy in those. But I am an advocate. My main trading is actually off a 30-minute footprint. And the reason for this is I'm trading various market profile concepts during the day. And then the 30-minute footprint allows me to look inside the market profile rotations. If I want to zoom in, if I find that we're churning around and I can't get a read vertically in here, I will move down to a smaller time frame. I like reversal charts because we can see the rotations within the market. So I wouldn't say time-based bar, well, I wouldn't actually say that any bars give stronger signals than any other bars. I think there is merit in using some time-based bars that match other visualization methods, like market profile. If we do a 30-minute footprint, we're looking inside market profile. I think it does no harm to have a vague awareness of what 15-minute charts and 5-minute charts are doing, just because so many people are looking at it. But after that point, I would say it's down to how well you can read the chart you're looking at. And there, I would advocate you really need to have enough volume within each chart bar that you're using to be able to read the volume. Now, Bob has just commented that the audio is, okay, there's a problem with Bob's speakers. So that was absorption at extreme, a relatively simple condition. Let's have a look at some of the other conditions we can identify. So I'm going to go through these one by one. What you can do, it's unlikely that you would apply a single instance of this indicator and turn everything on. You could potentially apply multiple instances of it with different parameters, but because this is all about absorption, we have put all these modes into a single indicator so that you can start to fine-tune the conditions that you're looking for. What we'll do here is identify absorption across bars, and this actually really plays well to the point that John has made. Actually, Dave has asked, can we show an example of using a 30-minute bar in absorption at extreme? Yeah, absolutely. And this is contextually something quite smart. It's going to be quite rare that we will have absorption at the extreme of a 30-minute bar. But let's put it on here and let's see what we can get. So we'll add Absorption Pro. We'll identify absorption as extreme. Let's start by saying extreme +1. And I'm just going to do fixed projection for now. And we'll do this across 3 bars. Let's see what turns up. Probably not much is going to turn up. My data feed just disconnected. Let's leave it off for now. Okay, but here are some examples. We're not really doing any look-back filtering. We're not testing whether this high is higher than highs across previous bars. But we're highlighting here where in any given 30-minute candle, we've got absorption at the peak, or in this case, at the highest price level, or highest -1, or lowest +1. So what we will see, if we really have it at the extreme of the candle, given how slow this chart is, it's going to be quite a significant event. Note here again, when we broke through this, we broke through with some aggression. There was a 0 print. Granted, it was overnight, but this absorption here had to be overcome. There was someone defending this, and it took some aggression to really get through this level. See, we've got another one there that hasn't held. But as we start to see it, well, that was at the overnight high. We had a push up here. That's at the top. Dave's asking why are bars closing at 15 and 45. It's because it's the overnight session. So my chart is set that we close at 3:15, then we do the mop up. If we have a look on the day session, let's just see if anything turns up. I think it's relatively unlikely on a day session that we'll get a lot of signals. However, when we do get a signal at the extreme on the day session, it's pretty significant. So if we are looking at a 30-minute candle and we know that the maximum passive activity happens at the top or bottom, because of the time frame, we know it's pretty strong. And there's something happening here. Maybe that was, sorry, that's overnight. What have we got there? That's also overnight. Still also overnight. Here we go. So this is on the 8th, which was yesterday. So during B period on market profile, someone was really trying to stop it going higher, but we broke through. And we did just go one way yesterday. But these can be pretty significant events on 30-minute candles. Okay, what we'll now do is we're going to turn off absorption as extreme on the fastest chart. And the next thing we'll look at is absorption across bars. And this goes back to John's question about, do time-based bars give stronger signals than non-time-based bars? Why would we want to look across bars? Well, it's because the chart period we are looking at is wrong. The market does not care that we're looking at an 8-tick reversal or a 5 range or 10 range or a 6-tick reversal. This is all totally arbitrary. Now, through these rotations, so because this is a reversal chart, we can see the rotations which we've got going on. There are going to be levels that consistently experience absorption. If I'm trying to accumulate X thousand contracts at a given price level, because that's the brief that my client has given me, and I'm at JP Morgan, and I'm going to get a bonus if I, fill their order in the next 15 minutes within 1 tick of VWAP, then every time we trade down to here, I'm likely to keep buying while I depress the market up here. with my limit orders. So I'll keep buying down at this level. Now, this trader who's buying large quantity doesn't care about my 8-tick chart. What we will see in these situations is that the same price level consistently experiences absorption. Now, if I use the numbers bars, the colored delta profile background to show this, it can be very hard to see where we've got consistent absorption at certain price levels. So we can actually have Absorption Pro do this for us. So I can say, please show me absorption across bars. We can set how many bars we want to look back across. So let's say we're going to look across, let's see, it's an 8-tick reversal. We'll look across 4 bars in this case, and we will visualize this as fixed projection for now, just so we can see level. Let's see what turns up. Okay. So this is telling me that this price level over the past 4 bars, so by definition it's this one and this one, these two did not trade here, there's absorption of buying at 29.10. Not an especially significant level in the context of what's traded, but we are starting to see things we otherwise would not easily see either, well, certainly not from this alone. So that was only -17 delta. This was about, let's see, it wasn't that one. We're looking at the negative delta that's consistently happening. Let's find some clear examples. I really want to see if we can find something at an edge. So we are evaluating based upon, are we getting consistent peak absorption at price levels across these 4 bars? Here's one that makes it very clear. We would not necessarily have known many of these candles are on a different time frame that we had absorption of buying going on. Here, there are 300 more contracts bought and sold. Here, we've got 500 more bought and sold. That was negative. That was negative. To the human eye, it would be pretty hard to assess this as a level. But for whatever reason, 23 3/4 was an interesting place for somebody to be passively selling, absorbing all the aggressive buying. And we can see through these rotations here, it held true until it broke. But look again, when it did break on the way down, it broke with aggression. So this was a level that was in play. So absorption across bars, typically on the faster charts, can be a very neat way of taking your arbitrary chart period that you've chosen to use on a faster chart, but aggregating up the volume that's occurring at individual price levels over time. So we may well see, let's just remove the Absorption Pro here. It may be that we would find the strongest absorption, so the peak delta values, on a slower chart. This candle, of course, is made up of many other candles which are wiggling up and down, backwards and forwards. But by using Absorption Pro to identify absorption across bars, we are saying to the chart, I don't care about your time period. I'm happy to look back over 4 bars or 30 minutes or a rolling 30-minute window since the start of the session. So that's one of the options in our look back filter that we examined last week. So as well as looking back over a quantity of bars, which I'm saying here in my across bar quantity, I can say I want to look back over a time period, maybe 30 minutes, or a time period which is a window of 30 minutes that resets every 30 minutes since the start of the session. If I do that, then I'm basically saying superimpose a 30-minute chart on here. Each time we have a new candle, reset the clock and only look back across these bars every 30-minute window. So this can be really powerful on your finer chart where you're looking for entries, triggers, other conditions that you may not be able to read vertically in a slower chart, but we are removing the time elements or the arbitrary divisions from here, and we're accumulating the volume. So that's absorption across bars. Dave has asked, can I go through that again? With respect, Dave, this is being recorded, So for the benefit of the other many dozen who are on this, I'm going to defer back to the recording. We'll get this up in the next few days. The key point is absorption across bars aggregates volume, and we can determine our look-back periods either using bar quantity or various time parameters, all of which we've documented in the user guide on the web. Over time, we're going to be doing various other introductory videos of these features as well. Now let's look at the next absorption condition. This is aggressive traders. In our version 2 order flow suite, we had an indicator called trapped traders that was quite popular. It doesn't actually occur that often, but let's just have a look at the raw data in this chart and see if we can find any conditions. Okay, here's one. It's not a significant high, but okay, there's a good one. What we're looking for here is, do we have aggressive trading at the extreme of a candle? So here, granted, it's against a zero print as well. This could well have been stops being triggered at the top here. Here are the people that have bought the highest price. So they're trapped. Let's see if we can find one without a zero print. Okay, here's another candle. Okay, they bought the highest price, but we continued up in these rotations. Same thing again. So you start to see it's a condition, as you'd expect, which we care about more at extremes of price. But rather than us looking for this condition, here's some stops being triggered, rather than us looking for this condition manually, let's use the computer to identify it and also bring out the best quality conditions. So I say identify trapped aggressors at extreme, yes. We will go fixed projection just for now to bring this up. And let's see what we pick up. Okay. So we are looking for buying at the top of candles or selling at the bottom of candles. We take the bar directions into account. So we want a price reversal, and we can also specify the parameters around the imbalance, just like we saw in price rejector last week. So we want 400% imbalance. Will we compare a zero on the other side? Is there a particular amount of volume that we must have for it to be a valid imbalance? How much delta do we want diagonally? So how much net buying, 171 less 39, are we going to allow through the filter? So just like every other indicator we've got that looks at imbalances, we allow some fine tuning of the imbalance. We can determine whether we filter this based upon, sorry, that's absorption extreme, I'm talking rubbish. For traps aggressors, we always consider aggressive trading at the wrong end of the candle. So on a down candle, have we got aggressive buyers at the wrong end? But what's most interesting is we don't see this in every candle. We want to see this either on a periodic look back or somewhere contextual. So if we use again session high or low, one of my favorites, and we will use emoji zone dynamic mode so we can track the history. Let's see what we find now. Here we go. So here is a big down candle. People here were buying in exactly the wrong place. They got trapped. As we auction back up, look where we stopped. That can only be a coincidence. How did that trade? Okay. It held us back for a while, then it broke and it turned into demand. Let's see if we find any others. Okay, so that's a strange timestamp on here. Is my time zone incorrect on this chart? Okay, that's in the mop-up, of course, from 15:30. Let's ignore that. Let's find something ideally during the trading day. Here we go. 12:45, 600 contracts sold below. That's unfortunate for them, wasn't it? And look what happened when we got back there. It has. Now, David asking, how do I know that 458 did not include sell limit orders? Dave, based upon this chart here and what we're seeing here, can you rephrase that question using the numbers that we're seeing here? So I don't know where that 458 was. I'll just scroll forward briefly while Dave. So we hold again. So a rare condition, especially when we're at extremes of the day, but this is why we want to filter. We only want the strongest signals. Okay, so Dave, use the 600 as buy limit orders. But yeah, that's exactly what they were. 600 sell orders traded at market, 600 contracts hit the bid. They matched against buy limit orders at the same price. Now, there could have been somebody here happy to buy 6,000 contracts. 600 contracts were not enough to consume all of the passive buy limit liquidity here, which is why we didn't go lower. There wasn't much volume bought, hence it's an aggressive sell imbalance. But these 600 aggressive sell contracts were absorbed and matched against buy limit orders. Could have been an iceberg. We don't know. Maybe there was only 50 being shown in the book and it kept replenishing. And an aggressive seller kept hammering away, hammering away, hammering away until they ran out of power. They only had 600 contracts to sell. Somebody here maybe had 10,000 contracts they're happy to buy. So they're standing there saying, you know what, fill me, fill me, fill me. So the 600 aggressive sell market orders were matched against passive buy limit orders. Anthony Drager used a great slide to explain this concept of absorption. These 600 contracts were absorbed. He explains it as you punch a guy in the face. So the aggressive traders here, these sellers are punching a buyer in the face. If the guy falls over, fantastic. But if you keep punching him, you keep punching him, you keep punching him, he's standing there going, come on, hit me again, hit me again, hit me again. You're not going to want to stand there. You're going to go the other way. And that's why the absorption repels the activity. So this tells us there is somebody here who's able to absorb at least 600 contracts. We don't know how much more they can absorb. So we go down here again, see what they're up to. Maybe they stepped in and bought. Maybe people got scared. But the point is, that here's the clue, the absorption, that happens to be showing itself through people who are on the wrong side. The absorption tells us there is someone really happy to buy the low. Actually, who wouldn't be happy to buy the low? Yeah. This may not be absorption extreme, but the presence of the trapped aggressive sellers is also another clue of absorption. And Dave's asking, would the other clue be that the bar closed green or up? Absolutely. We care about selling at the bottom of up bars, and we care about aggressive buying at the top of down bars. We're looking for the people who are trapped at the wrong end. So I don't care about a seller up here. A buyer up here. These people are on the right side. I care about somebody who's sold at the bottom. We've traded away from it. Yeah, that's why they're trapped. They probably puke. The 600 contracts get bought back. We move up. So that's our implementation of what was called trapped traders within version 3. We call it trapped aggressors at extremes. Very accurate name, trapped aggressive traders at the extremes above. So the final absorption supply and demand event I'm going to go through is brand new in version 3. We call it contested level outcomes. What I'm going to go off the 30-minute chart and we'll see if we can identify any of these manually. Not so easily, which is why we built an indicator. But oftentimes within the market, we will find that we have got the strongest negative delta within a candle adjacent to the strongest positive delta. Let's see if we can find one and talk through what's going on. But here's an example here. You can see we've got strong negative delta in this candle at 74.25. The strongest positive delta is one tick above at 74.5. So even though this is not so strong relative to the levels, this is showing us the battle that has gone on between powerful buy limit orders and powerful sell limit orders. Many times we'll actually see this level coincide with the POC, the highest volume within the chart. So the story that we're looking at here, just spotted a better one in, actually not quite, I think these are longer. But you can see here we've got big negative delta. So the aggressive selling here was being absorbed by strong passive buyers. The aggressive selling here was being absorbed by strong passive sellers. There was a fight going on. I call this contested level. But as you can see, it can be quite hard to identify. These are the battles that are being played out during the trading day. And they might relate to arbitrary levels like, pivot points, fibs, moving averages crossing over, who knows? I don't really care why they're there. What I care about is we've got strength on both sides of the market, and ultimately somebody won. So the contested levels within Absorption Pro allows us to see the outcomes of these battles. So if I identify contested level outcomes, we'll do fixed projection once again. Here we go, fixed projection, 3 bars. Let's just bring this up on the 30-minute chart, and we can start to see the effects of what I like to call this market-generated supply and demand. So it's pretty effective. We can see one here. That was the one which I identified manually. It's pretty effective at finding levels we probably aren't going to see as a human. Let's put the emoji zone dynamic mode on this as well, because these levels have come about from big traders fighting with each other. Somebody won, and it can be very interesting to see the outcomes of these levels as they're revisited. So here's a standout example. We auctioned up here, we auctioned down here. We had a fight here, although we closed above it. So we presumed that the outcome of this fight represented demand. We closed below it. Okay, this has role reversed a few times, in fact. I can be really smart because I can go into a 2-cycle emoji zone and have that project out green. I'm also, you can see I'm not calculating the dynamic mode using order flow. I'm only using price. So good. Let's get this working with order flow. So now I can tell the story. So this one broke. We had demand, turned into supply, turned into demand again. But look how we traded. It's within 1/6 level. That was the level that was in play. Let's find some more. I really want to find something that isn't in the overnight session. Okay, 11 o'clock on the 6th. We had a fight here. We traded back up to that area. We stopped to the tick because this was strong absorption of buying. But the way we traded at this area told us in the order flow it wasn't going to hold. And sure enough, even though we dropped back from it, we broke through it. Let's see how 57.5, 57.75 continues during that day. We didn't see it. But certainly on the slower charts, these start to get very interesting because we are seeing the battles that are being played out by large traders that can really swing some inventory using limit orders. Let's just scroll through 7th. So Wednesday, let's just see if we have some. My recommendation is apply this to slower charts, 30 minutes, 15 minutes, real time-based ones, and see how these levels which it generates play out over time. Because these are levels which are being generated through significant volume, which is being contested by traders that can swing significant volume using limit orders. Do I consider 30 minutes to be a slow chart? Well, it's my day trading chart, but I think it's slow by comparison to what lots of other retail traders use with their 8-tick reversal. For me, it's my good contextual day trading chart that I like to read. But for the purposes of this and identifying significant levels, yes, I would certainly look to start out by identifying contested levels using a 30-minute chart. Now, what we're doing here, we're highlighting these levels when they're 1 tick apart. Depending on the market you're trading, how thick or how thin it is, we can actually change this. So I've got an input here say, you know what, I'll consider contested levels that are 2 ticks apart or 3-tick range. You can kill the computer. If you put a silly number in here, if you put, 6 in here and you do emoji zone dynamic mode, potentially, especially if it's on a fast chart, you're going to pick up every level in every candle. This isn't the point. We're looking for exceptional events, but certainly on instruments like CL, it can be interesting maybe to put this to 2 ticks apart, and you can start to see how these levels evolve. On ES, 1 tick is fine. You can see here was one that turned its demand, suggested it was going to break. You're finding hidden levels that you otherwise would not see. Really, as a human, it's really unlikely that you would start to spot these in the market. Okay, so that's our walkthrough of Absorption Pro. I'm going to flip back to the presentation deck now, and we're going to start to look at advanced pullback analysis. This is a brand new concept we've introduced in version 3 of the order flow suite. I like to think of this as it's how we're trading the auction within the auction. And why are we doing this? It's, well, because as I said earlier, the chart period that you're using is wrong. Apart from the, chart periods that everyone's using and therefore have a bit of a self-fulfilling prophecy to them, whatever chart you're looking at is wrong. What we care about is the volume that's traded at each price level vertically, and we want to identify this volume to understand what's going on. So advanced pullback analysis helps us see this more easily. This is an example from our website, which starts to explain the principle behind this. If we think about a 30-minute candle, inside this 30-minute candle are 6 5-minute candles, or 31-minute candles, or some number of 8-tick reversals, or some number of 10 range candles. This is arbitrary. The volume within here, we can sum horizontally. So this 591 volume that lifted the offer, as we traded on these 5-minute candles, it's 548 plus 43 equals 591. Now, what we can do in advanced pullback analysis is we can consider the volume that traded when we pulled back from the extreme. And we can actually see this in Sierra chart as raw data. So when we analyze the trading that occurred within the candle, we can see how much volume, as we pulled back from a high, or as we pulled back from a low, is traded until we go back and we make a new high. And that's why I call it the auction within the auction. We've traded up, we've retreated back, we can have a kind of intra-bar footprint representing the volume on this retracement. And this auction is not time dependent, it's relating to the price extremes. So until we turn around again, we can start to analyze this, but we're not going to see this volume in here. This is aggregating up, but we can start to get really interesting clues about what's going on by considering the pullback volume. And the advanced pullback analysis feature makes this easier to see. So we will go back to the charts shortly, but here's another static example from our website that explains the principle behind it. Here's our 30-minute candle, here's our pullback candle. Now within this pullback candle, we can apply various emoji indicators to the pullback volume. We can use Price Rejector Pro, Absorption Pro, small prints, and also edge zones. We've got a price rejector at the bottom of the pullback candle. We've got exhaustion, we've got aggression. We also have peak absorption within here. We would not have seen these conditions necessarily within the 30-minute candle. We certainly wouldn't have seen the price rejector. We may not have seen them on the 5-minute chart. Maybe an 8-tick reversal, maybe a 10 range would have picked up. We don't know. The only truth is that this volume transacted since the high. And by thinking about the auction, within this slower candle, we can start to find levels that are arbitrary 8-tick reversal, 5-minute chart, whatever, may not be picking up. But it can be very hard to see as a human. So that is the point of advanced pullback analysis. The advanced pullback analysis makes the visualization of this easier. Let me walk you through it in the software. and you'll start to see how we can put it into action. So I'm going to turn on the data feed. Hopefully the internet is going to be reliable. I'm going to use the 8-tick reversal chart just so that we can have a good number of instances of this going on. Now, Sierra chart will actually let me see this. Within numbers bars, as you know, numbers bars can display multiple columns of data. We're only showing one column, bid and ask volume, but there's an option in numbers bars to show the pullback column. So I can say, pullback column, show me bid volume by ask volume. Now I've got a new candlestick that's been formed here. This is representing the volume that's trading since we've pulled back from the low of this candle. Okay, new candle's formed. Here we are. Here's the pullback. You can see, on a fast chart, this is hard to keep track of. Let's do the same thing on our 30-minute chart. So I'll modify the numbers bars. We'll go into the, that's calculated values. Let's go into numbers bars. Let's turn on the pullback column. Not many people use this in Sierra chart. It's very useful, but it can be hard to interpret. So bid volume by ask volume. Let's go to the edge of the chart. It's always a good place to be. So what have we got going on here? This candle has opened up. That looks wrong on the pullback. It's not making sense to me. Okay, so it's a recent high or low. You get the point. We start to see the volume that's transacting within the lifetime of this candle before we do something new. So let's just see what happens if this breaks down through the low. Very strange looking candle off the low. What we can do is apply emoji indicators to the volume that's occurring within this pullback. And you don't need to put this pullback candlestick on the chart. So it makes things much easier to interpret. Absorption Pro is one of the indicators that we can use for this. So within the settings, notice I'm not using any of the, let's say, historic candle supply and demand events. I'm not going to look for absorption extreme, trap traders, etc. What I want to do is do pullback evaluation. And I'm going to start by saying do pullback evaluation on the current bar only. And the emoji zone visualization I want to use, because I'm only using pullback evaluation, is pullback only. Now you will see we have got magenta and cyan, or the other way around, or we've got these colors confused. We're now showing where we've got absorption going on within this pullback. So this is telling us, okay, it just disappeared. Let's wait for one to appear again. That's telling us the lowest price, there's absorption of the selling. Above it, 2.6 briefly, there's absorption of the selling. Each time we get a condition, we put this symbol above or below the chart to tell us what's going on. So someone's trying to hold below. It's unfinished business. We know it's not going to hold. We saw the aggressive, we saw the selling coming. We saw the absorption, the buying there through the pink highlights. That can be a really fantastic entry trigger. So as we've pulled back, we can see, look, whoever's buying here can't take it higher. We can use these levels as our triggers to enter. We've got a short bias. By analyzing this pullback volume, now we can be trading the auction in the auction here to refine our entries. So someone's holding the low. I may well want to get short. Now I want to get short because I've got an absorption level there. My stop's going to be just above it. So I can start to lean on the passive volume that is having an impact within here. And this can start to form a really good trigger for your entry timing. As I say, not many people use this because it can be really hard to interpret. But what I can now do is turn the numbers bars to not show the pullback volume. So let's do that again. We're still getting the pullback signals. If I had a long bias, this is confirming to me that during this auction, okay, there was strong buying there. Let's do the same thing on our faster chart, just so we can see some more instances of this going on. So we will evaluate pullback, current bar only, and we'll visualize this as pullback only. So in this candle, you can see here's the peak absorption of the buying. Okay, but you saw demand suddenly popped in. Someone's trying to hold it there. So these can be really interesting ways of getting in if you've got a bias. As the candle retraces, but you're looking to go in the prevailing direction, you can use this as your confirmation of where we're going. Here, I think we're likely to go up. We've got a price rejector at the bottom here. We haven't run out here. I'm happy to buy. He's going to protect me. So I'm very happy going long here. And look at this. Where people are happy to buy just moves up one tick. So that strong absorption came in again. Okay, we broke through it. I'm personally happy about the bottom of this candle. We've got somebody holding it again. If you're a scalper, this can be a really interesting way to be trading. Now, we can also, using some of the features which we spoke about last week, we can publish this information, these price levels, actually into subgraphs. We make these pullback prices. We actually can publish these price levels into subgraphs, which gears you up for alerts or automation. We can also alert you to the fact that we've got a condition in place. So if you maybe want to, use this, for example, scaling in through simple automation, spreadsheet trading, this kind of thing, you can access the data of the price levels that we're identifying in real time. Sometimes this can happen too quickly. And we can use any of 4 indicators, Absorption Pro, Price Rejector Pro, Edge Zones, or Small Prints to trigger these. So if we're looking maybe for a turnaround in here using Price Rejector, we can highlight that. This is a really powerful feature. As well as identifying the levels within the bar, we can also tell the computer that at the close of the candle, as well as evaluating the pullback within the current bar, so these levels, give me an emoji zone, because clearly something's happening in this candle in a different time frame to that which I'm evaluating. So if I tell the computer when this candle closes, consider these levels and populate an emoji zone. When this closes, let's see, I will allow this few moments to see if this candle closes. If this supply pullback condition remains in place at the close of this candle, which would require this candle to close somewhere down here, we'll keep tracking this as new supply, just like any other emoji zone. So the advanced pullback analysis can be a really good way of finding levels that your main trading chart just isn't going to see because your chart is wrong, the time period's wrong. It's that simple. So we've covered Absorption Pro and we've covered advanced pullback analysis. Both of these are pretty sophisticated indicators and concepts. But if we sum it up, absorption is about seeing the unseen. Many traders are only focused on aggression and imbalances. We have to consider what is on the other side of the market where we're trading. So Absorption Pro helps us see that. I'm just going to flip back to the main chart because I've just seen, here's what I was talking about, that this candle closed with pullback at the top, representing supply. We're now projecting this as new supply, as an emoji zone. So we've got another level that we can track. So the advanced pullback analysis allows us to trade this auction within the auction, which may otherwise be too hard from the raw data to go and interpret purely from the raw data. The indicators are all about filtering out the information that's within the raw data, making it easier to interpret, easier to act on. We've got all of these indicators and all these features documented pretty thoroughly on our website. You'll find them in the knowledge base. We explain both the underlying concepts which sit behind them, as well as the indicator settings, so you can start to explore them. Do not put all of this on one chart in one go. It's too much. You have to start to understand this stuff from first principles, and then you can allow the computer to act as your assistant to make this stuff easier to see so that you can then start to act on it. I've flipped over here because you can start seeing now the effect of putting a pullback level into an emoji zone, we may not have seen this level just on analyzing this candle. So really powerful stuff within version 3 of the order flow suite. I encourage you to explore it. Please read the documentation. We will be populating more and more videos over time with different walkthroughs and examples as we see really tasty examples of this in the market. That pretty much wraps it up for today. If you have any questions, please pop them in the Q&A or the chat boxes. I see JK has asked, can I post a link of where the videos are posted? Yeah, I did that earlier, but let's copy and paste that. Videos are going to be up by close of play Monday at these 3 links. It looks like, okay, Rob, the video will be available by close of play Monday at the links, which I've just posted into the chat box. And that seems to be it in terms of questions. So Mike, Jose, thank you very much. I'm glad you enjoyed it. Video is going to be there for review. I hope it's been thought-provoking. Next week, we're going to look at aggression in various forms, including edge zones, thin spots, and delta scalper. But in the meantime, let your brain think about absorption, and feel free to drop us an email if there are any questions. And I wish you all a good weekend. Thank you very much.